All right, good evening, everyone. My name is John Bose. I'm a Skyward Community Master, and I am also a network marketer with over half a decade of experience. I've developed a sales team with Skyward Community of over 2,000 partners, for which I am very proud. And together with this sales team of mine, we have made sales and attracted investments of over $358,835 for the development of Unitsky String Technology through this Skyward Community crowdfunding platform. I'm very excited because the project, Unitsky String Technology, is changing the transport sector. And I am very, very grateful to be a part of this. I'm very grateful and excited to be sharing this opportunity with you tonight. By the grace of God, I've been a 3-time car award winner from network marketing. And what I do as a side gig is that I teach busy professionals like you how you can make money online from Skyward Community and Unitsky String Technology. Without further ado, let's jump into it. Tonight, I'll be telling you 3 things. Number 1 is I'll be telling you about investments. Secondly, I'll tell you about shares and the different kind of categorization of shares. And finally, I will jump into Unitsky String Technology, tell you about UST and SWC. That's UST stands for Unitsky String Technology, SWC stands for Skyward Community. And I'll tell you about the unique opportunity in this business endeavor. Short disclaimer, ladies and gentlemen, the presentation tonight is for educational purpose. We encourage that even if you hear something that makes you want to maybe get involved and invested, you do your own due diligence, make your own research before you make any financial decision. It might even be advisable to reach out to a financial advisor before taking any concrete financial decision. So first lesson is an investment. We're going to watch a video and then we're going to have a little discussion afterwards.
An investment is an asset purchased with the expectation that it will generate income or appreciate over time. In finance, common investments include stocks, bonds, real estate, mutual funds, and to a lesser extent, commodities, annuities, and options. Many investments trade daily on the public market. Current events and company performance can cause a company's stock to rise or fall, and significant news can affect the entire stock market. Generally speaking, if a person follows safe investment practices, the longer they invest for, the greater the chance they will grow their wealth. Inversely, the shorter the period of investment, the higher the risk of that investment losing money. But with all investments, there is always some risk that the value of the asset will decline rather than increase. Despite the risk, wise investments are one of the best ways to grow your money. Let's say 2 brothers each inherit $100,000. Hubert does not invest his money, choosing instead to hold it in a checking account that earns no interest. Ivan, on the other hand, invests his money in some broadly diversified mutual funds. Every day, Ivan's investments change in value. Over 10 years, Ivan's average investment growth was about 7.2% per year, meaning his total investment grows to about $200,000. His brother Hubert, however, would still only have $100,000 in his savings account.
The key points of learning are that 1, an investment is an asset that appreciates value over time. Number 2, time is a key factor. So the longer you invest, the greater the value of your asset. The shorter you invest, the higher the risk of that investment losing money. Every investment comes with risk, but thorough risk analysis can help you avoid the potential of losing through investing. So if you diversify your investment, it can reduce your risk, but it can also significantly impact your returns. Despite the risk, however, wise investments are one of the best ways to grow your money. Now, one way of investing your money is to purchase shares. What are shares? They are units of ownership in a company or a financial asset. If you buy shares in a company, you'll be called a shareholder or a stockholder. For some companies, shares exist as a financial asset that provides the equitable distribution of any residual profit declared by the company in the form of dividends. So when a company makes profit and they want to divide it, like you see in the picture beside this write-up, you see different people with hands like taking slices of the pie. Just the same way, the number of shares you have will determine the amount of profit that will come to you, or the slice of the pie that will come to you. So if the company declares a profit after maybe a quarter or a year or a half year, the amount of shares that shareholders own will now determine how much of this profit is due to shareholder A, shareholder B, shareholder C, and so on. Now, there are some shares that the stock does not pay dividends. You will see that in the categorization of shares. We'll look at that later in tonight's presentation. For those shares, the investors only participate in the distribution or in the appreciation of the share price in the stock market. So if a person buys a share, as when the shares are maybe selling for $10 in the stock exchange market, and then after some time the company does well, the shares are now selling for $50, that is what we call price appreciation. And at that point, if they sell, they'll be making a $40 profit per unit of share that they sell. So there are two ways you make money as a shareholder. There is profit from price appreciation. There is dividends from the profits of the company. Now, we will see another short video on the subject of shares and dividends.
A share is a single unit of ownership in a company or financial asset. It is essentially an exchangeable piece of value of a company or asset which can fluctuate up or down depending on several market factors. You can think of a share as a slice of the financial cake. Shares are also known as stocks. A company divides its value into shares as a means of raising capital. Imagine a company issued 1,000 shares. If 100 of those shares belong to you, then you own 10% of that company. People who own shares in a company are called shareholders or stockholders. Shareholders receive income from the shares they own on a routine basis. These are called dividend payments. A public company sells its shares on a stock exchange. Public company shares are open to the public, hence the name. A private company, on the other hand, sells its shares by private arrangement. If you want private company shares, then you must approach the company directly and persuade its shareholders to sell to you.
A dividend is a payment shareholders receive from a company's earnings. When a company is profitable, management can choose to reinvest profits to help grow the business or distribute those profits to shareholders in the form of dividends. Dividends come in several forms, but the most common is cash, which is deposited into shareholders' investment accounts. For example, if a company declares a 30-cent dividend and you own 100 shares, you'll receive $30. Typically, mature companies with strong cash flows are more likely to pay dividends. Many investors seek the income associated with dividends and often view them as a sign of strength and positive expectations for future earnings. Companies often pay dividends quarterly. However, some pay semi-annually or annually. Keep in mind, companies aren't obligated to pay a dividend and can reduce or stop paying it at any time. Some investors specifically seek out and invest in dividend-paying stocks. Dividend stocks can provide income and potentially enhance a portfolio's overall returns. Since 1926, the U.S. economy has undergone many bull and bear market cycles. However, the income return received from dividends has been relatively consistent during this time period. In addition to potentially higher yield, many investors look for consistent and growing dividends over time as an indication of company health and likelihood of paying future dividends. It's also important to remember that dividends aren't guaranteed. Companies that pay unusually high dividends may not be able to sustain them, and if dividends are cut, it might send the stock price tumbling. Despite these risks, dividend-paying stocks tend to provide income while still allowing for the potential of stock price appreciation.
A share.
Now we have seen what shares are, and I'm sure from that video you already have the idea of some type of shares. But to give you greater clarity, we are going to deep dive into the categorization of shares. And there are two ways that I would like to categorize them, or according to two variables. The first being the possibility of shareholders partaking in the company profit sharing. And if we categorize according to this variable, we have two kinds of shares. We have dividend shares they have non-dividend shares. So dividend shares are the ones that the company will take a part of the profit that they make. It can be in a quarter or in a year or in a half year. And then that amount of the profit that they take out, they will pay it back to the shareholders in that company as dividends. So those type of shares that allow you to participate in sharing the profits of the company are called dividend shares. We equally have non-dividend shares, which only allows the shareholder to profit from stock price appreciation. So I bought shares when they were $10, I sold when they were $50, and I made a $40 profit per share. That one is share price appreciation. But the shares do not pay me any dividends whatsoever. So those are non-dividend shares. Now, it's important to note that dividend shares also allow you to profit from share price appreciation. So with dividend shares, you get to profit from both the company profit sharing and the stock price appreciation in the stock exchange market. However, if you sell dividend shares, it's like you have a house and you are getting rent, but then you now took the house and sold it to someone else. That new owner will be the one collecting the rent. So you will no longer be entitled to receiving dividends from those shares. The new owner will now be the person collecting the dividends. I'm explaining it I'm using very basic terminologies so that everyone will be carried along. Now, there is another way to categorize shares, and that is according to the kind of company selling the shares or the stage of the company's development in which those shares are sold. Now, if it is a private company, that is a company that has not gone public, that is selling its shares, like you saw in that video, they sell through private arrangements. They sell through private arrangements. They don't sell in the stock market because they have not gone public. It's only companies that are publicly listed that are trading their shares in the stock exchange market. Very important. So those companies are called public companies because their shares are available to the members of the public through the stock market. But private companies, on the other hand, are selling their shares through private arrangements. And because they've not yet gone public, those shares are known as pre-IPO shares. In other words, before IPO. IPO means initial public offering. The day a company goes to the stock market with their shares is the day they go public. That's the date of their IPO. So after that day, they are then known as a public company. And you can then just go on the stock exchange market using apps like Bamboo app, all these apps that help you trade the stock market, and just go there and buy. For example, if you go on Bamboo and you check for Amazon shares, Facebook shares, Tesla shares, you will see them there. You can just buy and own the shares. But if you want to buy a private company shares, you will not see their shares on the stock exchange market unless they've gone public. Now, you can approach the company and buy from them. So some companies will give you platforms through which you can engage with them. For example, with Unitsky String Technology, if you want to buy their shares, you go through the Skyrocket community crowdfunding website to buy the shares. So some companies can give you a means through which, or a platform through which you can buy their pre-IPO shares. Or you can just approach the company directly and indicate your interest in purchasing the shares. So we have pre-IPO company, and usually this is the riskiest time to buy a share in a company, but it is also the cheapest time to buy because the company realizes that the investment in their company at that time or at that stage of their development is a high risk. It's a high risk because they may not go public. They may fail because it's a startup. It's still a private company. It has not gone public. So what if they fail? To compensate you for taking that risk, what do? They give high discount on their shares. So it is a very cheap period of a company's development cycle in which to buy shares, because at this time they're giving high discount and their shares are very cheap. The key point here is that pre-IPO shares are cheap, but they're also very risky. Now, IPO is initial public offering. When a company goes public, they would have announced beforehand that, okay, they are going public. This is the stock exchange marketing which they are using. Maybe it's NASDAQ or any other ones of the popular stock exchange markets. They are going public, and their price per unit will be so X amount. Then when you go and buy their company shares on that day of their initial public offer, you are buying for a price a lot higher than what the shares sold at the pre-IPO stage. So sometimes those people who own the shares already can even be selling at this point or later and selling for a higher price, which means buying pre-IPO shares and selling when they go public is one of the ways you can actually even get a quick return on your investment if you buy pre-IPO shares. After IPO, we equally have post-IPO shares. So these are the shares that are already in the stock market. After the company has gone public with their shares, the shares that are in the stock market, they are affected by different factors such as the company's performance, the market demand and supply, current events, significant news, etc. For example, we had the COVID pandemic, and when the COVID pandemic happened, many companies were affected in different ways. For instance, airlines were no longer able to travel due to travel restrictions, so their business was affected negatively. Whereas Zoom and Google Meet and all the other teleconferencing applications for doing live webinars, working from home, those ones, they saw a surge in the demand for their products because of the COVID pandemic. So their business improved. The same COVID pandemic that negatively affected the airline industry positively affected video telecommunication industry. So one company or one industry was suffering from the same current event that was beneficial to another industry. So basically, when a company is listed in the stock market, they are affected by different factors: market demand and supply, current events, and the company's performance itself. So if we illustrate this with a company which is Zoom Communication, you will see that during the time of Zoom's pre-IPO, their shares were sold for 30 cents per share, and that was in the year 2015. At this time, they reached out to high net worth individuals, HNIs, to come and invest in their startup. And their startup their shares were sold for 30 cents. And then when they went public in the year 2019, precisely on the 18th of April. They went public for the price of $62 per share. So that was a 20,666% price increase as against the pre-IPO price. You can imagine buying the shares as when they were in the pre-IPO stage at 30 cents and then selling each one for $62. You will be making $61.70 as profit for every share you sell. And Zoom also pays dividends. So even if you don't sell your shares, you'll be getting dividends from merely owning those shares. Now, ladies and gentlemen, the price of Zoom shares experienced their all-time high as at 16th October 2020 during the COVID lockdown. And their shares were sold at that date for $559 per share in the stock exchange market. If you want to see the price of Zoom shares today, you can actually just go up and pull it up so that you can see what we are talking about. I mean, like, it's always better to have a visual impression. And you can actually check this out yourself. You go online, you Google Zoom share price or Zoom share value, and you will see a chart like this on my screen. You can see the chart on my screen, I'm sure. And then when you come and you click on max, let me zoom in so that you can see where my cursor is. When you click on max, there It will show you the entire spread out of when they went public on the 18th of April and the price at which they went public. And then you can see when they were sold on the 16th of October for $5.59 per share. As of today, Zoom shares are selling for $67 per share. So if you own Zoom shares, well, you could have made a decent profit from just selling your shares. But what if you did not sell? Will you not make profit? The answer is you will actually make profit, because Zoom is a dividend paying share. So if you check their financials, and let me see if I can open that, you would see that they pay dividends. And let's see if I can open the financials. Give me a minute. Let's see. Okay, so we have their financials right here. If you look at the quarterly financial, you can see the chart. It shows I'm trying to find their earnings per share. You see this place here says earnings per share. And then here it says January 2023, $1.22. So let's see if I can go to annual. Let me show you the annual EPS. So EPS for 2023. Okay, so the fiscal year ended 1st of, let me see that. Okay, fiscal year ended 31st of January 2023. And their earnings per share, I'm going to highlight this for you so that you can just see that it's $4.37. It means if you own Zoom shares, for every share you own, you would have earned, over the last fiscal year, you would have earned $4.37 for every share you own. Now, if you own 1,000 shares of Zoom, like let's say you bought Zoom pre-IPO shares when they were selling for 30 cents, and you bought 1,000 shares would have cost you, let me see, for 30 cents, you will be spending, give me a minute, let me quickly pull up the calculator because I cannot run the number off head. I may have been able to, but I don't want to make mistakes. So if I have to buy 1,000 shares for $0.30, I would have spent $300 to buy 1,000 shares. So now that 1,000 shares will each fetch me over the last year $4.37 each. That is 4.37, right? Which means I would have made $4,370 in income from just owning these shares. Does it make sense? A lot more money than I spent in buying the shares is what I would have made as profit from dividends alone over the last fiscal year. And that does not mean that in the next fiscal year, they are not still going to pay you your dividends. As long as you own those shares, anytime they declare profits, you are going to be paid what is due to you, due to the number of shares that you own. So this is just using Zoom as an illustration of what we have been talking about on the type of shares. Ladies and gentlemen, I hope I haven't lost anybody. Please let me know you're following. Just go on the chat box and drop some fire emojis. I want to know that you're following. Go in the chat box now. I want to see your fire emojis. Awesome. I can see from Miss Patricia. Okay. So who else? I want to see your fire emojis before we continue. One more before we continue. Just go in the chat, the Telegram chat, and drop a fire emoji. Please don't drop a fire emoji on WhatsApp. I'm not going to see it. I'm not on WhatsApp at the moment. Drop on the Telegram group, this Telegram group. One more feedback before we carry on. I hope the instruction is clear. I want you to drop fire emojis in the chat box. I want to know those of us that are still with me. So I can see Miss Patricia is still with me. So I want to see who else. So please kindly drop a fire emoji so that I can proceed. Oh, I see that we have Manager Ned Corey. It's a pleasure to have you here tonight with us, sir.
Yeah, it's a mutual pleasure. How are you doing?
Thank you so much. We're wonderful, sir. All right, ladies and gentlemen, let's carry on so that we don't waste too much time. Now, you see on my screen a potential profit analysis for how profitable it is to invest in a pre-IPO. So, ladies and gentlemen, in 2015, Peter Obi was approached by the people behind Zoom Communication, and they asked him to invest in their startup. Now, at that time, when he was approached in 2015, the shares were sold for 30 cents per share. And as at that time, $1 was 198 naira. So assuming Peter Obi invested 500,000 naira, he's a rich man. 500,000 would not mean anything to him. So if he had invested as at that time, he would have been approximately investing $2,525 because as at then, $1 was 198 naira. Now, at the price of 30 cents per share, $2,525 would have bought him 8,417 Zoom pre-IPO shares. Now, as at 16th of October, those shares hit the price point of $559 per share. And in that same year, $1 was 380 naira. So that 8,417 shares would have been worth $4,705,103, which as at the exchange rate of 2020, if we converted that to naira, would have been worth 1,787,939,140 naira over a period of 5 years. So it means 500,000 naira investment after 5 years would then be worth 1.7, in fact, almost 1.8 billion naira. This does not include the residual income from dividends payments that he would have been getting. So it is a lot of money he would have made if he had invested, but he didn't invest, which is why he came up to say this. He came up to say that he regretted not taking that opportunity. I'm going to show you the news clipping where he actually came up to say by himself that he missed an opportunity and he regrets it. Mind you, when a rich man say, I regret not doing this, that means even in his riches, he was aware that he made a mistake, a very big mistake, by ignoring the opportunity to buy the pre-IPO shares of Zoom. He acknowledged that that was a mistake. Now, that's a rich man. It's not as if he's not going to feed fine because he did not invest in Zoom. It's not as if he's not going to take his children to school. Or, in fact, he's currently, well, one of the presidential candidates for, and probably even maybe the one who emerged victorious at the polls. We don't know until the court issue is cleared. But this is a wealthy man we're talking about. A man who has the resources to run for the highest office in Nigeria. He's not a poor man. He has done well in business. He's a tycoon. He's a high net worth individual. And he said, I regret the opportunity because I should have grabbed it with both hands. I wish I could open this news clipping so that you will read the news yourself. So if a wealthy man can come out to regret missing an opportunity like this, imagine me and those of us who don't have the kind of money he has. How would we feel if tomorrow we see an opportunity like Unitsky String Technology that we knew about maybe 5 years ago and we did nothing? We just sat on our hands. We did nothing with the information. We said maybe it's a scam. All these people, all these shares, we bought shares in bank that time, nothing happened. And then you miss this opportunity. Later on, you now come to see the capacity of how it would have changed your life. And God forbid, you have not actually gotten a significant financial breakthrough at that time. How would you feel? That is a food for consideration. Now, ladies and gentlemen, I have introduced you to the foundation that will give you something to build the knowledge I will soon be introducing to you upon. I've told you about shares, the types of shares, pre-IPO, IPO, post-IPO. I've told you about investment. Now, we are going to jump into the next and most important, which is the subject of Unitsky String Technology, otherwise known as unisky Incorporation. We're going to watch a video before we continue.
On the world's roads, every year 1.5 million people die. More than 10 million become disabled. Roads impact 20% of the Earth's surface, which is taken away from nature and excluded from agricultural turnover. The existing transport causes environmental damage of 2.5 trillion euros per year. If we do not look for new solutions, the situation in the world will only get worse. Transport must change, become more efficient, safer, and friendlier to the environment. The Skyway Transport is a sturdy and lightweight pre-stressed overpass along which special electric vehicles of various configurations and capacities run at high speeds. The traffic is carried out on rails raising the road above the ground that are the central element of the overpass. The string track structure is integral. Even if several supports are damaged, it will not paralyze the traffic, as pre-stressed string rails will only bend without breaking. In combination with multi-element rail design, it provides multiple safety reserve. The small cross-sectional area of the main elements greatly diminishes the danger posed by hurricanes and tsunamis, floods, snow and sand drifts, which remain below the traffic level, thus rendering the track resistant to natural disasters. The Skyway track structure complies with international safety standards. The rolling stock is equipped with anti-derailment and backup brake systems. The modules are driven by 4 or more motor wheels, each of which can operate independently so that even if most of the drives fail, the traffic will continue. Duplication of critically important functions and systems is one of the basic principles of Skyway safety concept. Fully automated intelligent control system excludes human factor, which is the cause of the majority of traffic incidents. The intelligent system features real-time information analysis. It is capable of adjusting the movement if an obstacle is detected, controlling the passenger's behavior in the cabin. No matter what is the weather or the time of the day, the system allows driving safely in poor visibility. With the possibility of operating around the clock, the system collects the data on the state of the model and the environment, controlling the process of pickup, drop-off, and traffic intervals. But it is impossible to take into account everything. And therefore, in such cases of emergency, in addition to the intelligence system responsible for centralized safety measures, each Skyway vehicle is also equipped with a number of autonomous emergency devices. These include an automatically coupled emergency towing device, with which a vehicle moving behind or in front can tow a failed vehicle in order to deliver it to the nearest station. Fire extinguishers in the passenger compartment, duplex voice and video communication with the dispatcher. In extreme cases, passengers can be evacuated from the cabin via an emergency exit with the help of a simple and reliable mechanism for evacuation. Designed to achieve maximum safety and efficiency with minimum energy cost, Skyway systems have the lowest level of environmental impact to date, operating on clean electricity, demanding minimum land acquisition, and allowing housing construction and agricultural cultivation under the track structure.
Yes, this is the most amazing transport system, period. We had in about 2-3 days ago, was it 2 days ago? We had an accident in Lagos involving a train and a bus. And I was just thinking, if it was string technology that was being implemented in that very section of road, there wouldn't have been an accident because our vehicles go above the ground. Even if we have, you know how Nigerian drivers are, they want to always rush. They had already said, stop, a train is coming. And the bus driver still wanted to rush and see if he can quickly, he doesn't want to waste time, he wants to rush. He doesn't have, had a very impatient people. Because human factor is the cause of most of the accidents we see on the road. Now, this man entered when they had said he should stop. And the train hit the bus and dragged it for 100 kilometers before coming to a stop. 6 people died on the spot. 96 were injured. And I was just thinking to myself, look at the way lives have been lost because of one man's careless decision. But if we had implemented better transport systems, like the Unitsky String Technology rail, our vehicle would go above that mad driver and 6 lives would have been spared. 96 people would not be injured. So building Unitsky String Technology is not just about investing to make gain. It's about solving a big problem in the transport sector. It's about preventing the loss of lives and property. It's about rendering an act of charity to the planet, to humanity, literally. So investing is not just about making profit. It's actually about meeting a need. And the need, there's a global demand for this transport system. Looking at the problems this transport system solves, anybody can tell that this will be a hit, an instant hit in the market. So getting on board is a no-brainer. You should not be thinking this thing too much. Should I invest? Should I not invest? Look at the technology you are investing into. It is massive, predicted to occupy over 60% of the global transport market. So it's not something you will sit down and be thinking. There's no much thinking required here. It's for you to see it and jump in. In fact, I would not say go and sell something of value to get involved. Can you hear me?
Yes.
Okay, I was logged out a bit because I had a little bit of network challenge, but I'm back. All right, so let me share my screen once again. Okay, where were we? Right. Okay. slide number 23. No, 20. Yes, slide number 20. Okay. Okay, I'm not sure this thing is showing the right screen. Let me try again. Let's see. Okay, I think we're back. So, Unitsky String Technology chose crowdfunding for their development as their way of raising capital to finance the implementation or the development of this technology up till the point of commercial implementation. Uh-oh. I think something is wrong. I shared the wrong slide. Or I shared the wrong, it's not moving. Give me a minute, let me see if I can rectify this. All right, then let's try again. Forgive me, I'm having a bit of technical difficulty, but then, okay, we're back. So, individuals can invest in the development of Unitsky String Technology. That is, you are providing them with the capital they need to develop this technology. In exchange, you are receiving their highly discounted allotment units or pre-IPO shares. Now, these shares can be sold at a much higher price when they are listed in the stock market, and they can also enable you to receive dividends on a quarterly basis. So exactly how profitable is it to invest in this company? I'm going to show you right now that if you buy these shares, what you could be making when they go public, which can be maybe within this year or maybe next year, can be anytime, because they're already in the 14th stage of their 15 stages of development. So they are very close to going public. You don't want to be sitting on the fence by the time this company goes public, because when they do go public, a share will be sold for $1 or more. Now that means that what you could have bought for way less, you'll be buying it for way more. Let me give you an example. You have a package of $150,000. That package will give you 7,500,000 shares at a discount of 50 shares per dollar. Now, if they go public at the price of $1 per share, those 7.5 million shares will be worth $7.5 million. So the person who has already bought them with $150,000 enjoying the high discount of 50 shares per dollar will sell those shares at the lowest possible price of 7.5 million and make an instant profit of $7,350,000. So with that in mind, the package of 100,000 will give you at least a profit of $4,700,000 at IPO. The package of $50,000 at IPO will give you a profit of $2,200,000 instantly. The package of $25,000 will give you a profit of at least $1,050,000 at IPO, instant profit. The package of $10,000 will give you an instant profit of $390,000 at IPO. The package of $5,000 will give you an instant profit of $160,000 at IPO. The package of $3,500 will give you an instant profit of $108,500 at IPO. The package of $2,500 will give you an instant profit of $72,500 at IPO. The package of $2,000 will give you an instant profit of $56,000 at IPO. The $1,000 package will give you a $26,000 profit at IPO. The $500 package will give you a $12,000 profit at IPO. The $350 package will give you a profit of $7,700 at Can you hear me? Hello, can you hear me?
I can.
Awesome. So like I was saying, the $200 package will give you a $4,000 profit at IPO. The $100 package will give you a $1,900 profit at IPO. And the lowest package, which is the $50 package, will give you a $700 profit at IPO. I mean, if that is not awesome, I don't know what is. I really don't. We could be talking more and more about the transportation or, other aspects of this opportunity, but I would like to make tonight's presentation very brief by just telling you about how you can earn. I've already shown you how you can earn and what you can earn when you make investments. I want to now tell you that there is even a way you can earn without making any investment. You see, there is a platform which is Skyward Community. You can see I have a logo right here. It's SWC, Skyward Community. And it is the platform that allows for us to purchase the pre-IPO shares of Unitsky String Technology. One of the things that they do to enable more people to know about and invest in this opportunity is they have a partnership program which allows existing partners to attract investors into this opportunity. And when you do attract investors, you will earn a commission of 15% of the amount they invest. That money can be withdrawn or invested in the purchase of your own packages. So guess what, guys? This money, you can actually earn it even before you invest. So as a Skyward community partner, when a person invests through your recommendation, you will receive 15% of their investments, which you can invest or withdraw. So with this, you can actually earn money without even investing. And that money you earn, you can then use that as your investment. So you cannot come in here and say, oh, the reason why you did not leverage this opportunity is because you did not have money. No, because there's a way you can actually do this even without money. Neither can you come in here and say the reason you did not do it is because you don't want to promote, you don't want to do something that requires affiliating or referrals. This is not a compulsory requirement. You can come in here and invest, buy shares and sit down. When they go public, you sell or you hold your shares and earn dividends. So be you an investor, be you a marketer, this opportunity is suitable for you. You have no excuse except the one you make for yourself, literally. So ladies and gentlemen, I would not dwell much on the rest of the slides. I think I just show you this testimonial by Prince Tony Omoage, former Deputy National Secretary of the PDP and a board member of the NGE, who also happens to be an investor and a partner of Skyward Community. And then we will close with that.
When he came to me and spoke about the Sky World Community, like a human being, I had my fears. But after a day or two of studying the paper he gave to me, I think the paper outside here, I decided to take a plunge. I said, what is it? I'm going to the small one. If I lose $500 or $1,000, it doesn't mean anything to me. So let me take a plunge. But by chance I win. And I think it was only a few days ago, rather than losing, I got some dollars. Because I had introduced some of my friends in Abuja, well, the former governor of the state, and we did business with that fellow. The ambassador followed up in Abuja, and before I knew it, he got into this investment with $10,000. And of course, you know what that means. So I came back home and smart. And we are going further to introduce some other people in market caps. We are looking at different, because I happen to have some former ministers, some this, some that, some that, some that. So if I, as a neophyte, can start to achieve that, then those of you who are experts and then you know how much we're going to get. So that is my message to you. And I do believe that we shall all smart. Thank you very much.
All right, so that brings us to the conclusion of tonight's presentation. The last thing I'm just going to dwell on is how to get started, because I always like action-oriented presentations. And if I don't tell you how to get started, I believe I would have just wasted your time bringing you here, talking about this opportunity, and not even telling you how to plug in. Now, if you've been invited to this presentation or to watch this presentation by anybody, you need to get back to that person, ask them for a link to create your account. It's not going to take you up to 5 minutes to do that. Then you verify the account after it's been created, and you can optionally choose to sign the partnership agreement. After your account is being created and verified, you will then fund it for the amount of money you want to, deposit money that you want to use in buying any of the package that is ideal for your budget. And you will see all the packages, all the investment packages, and you just buy anyone that's suitable for you, and you sign the convertible note agreement, and you get the pre-IPO shares in your ownership. There is a guide that shows you step by step how to do this. It's a video guide. It's right here. But then the person who gave you the link to sign up will also give you this guide, so that if there's any step that's confusing to you, you can watch the guide and get clarity on how to perform the account setup of your SWC account. So your registration, verification, signing the partnership agreement, funding your wallet, even making your investments, making withdrawals. For those of you leveraging the partnership program, you want to make withdrawals, you can actually watch video guides on how to do that. Buying shares, all the parts that involve purchases, withdrawals, everything is covered in this guide. So you have full clarity on how to proceed, what to do, and how to do it. So that brings us to the end of tonight's presentation. And I'd just like to thank you for your time. And if you have questions, this would be the time to ask. Yes, so I'm going to stop the recording now and take questions.